Wall Street closing at new all-time highs today, thanks in part to a big rally overnight in China. The Shanghai Composite, the Shenzhen Composite, and the FXI China Large Cap ETF all soaring on this first day of trading of 2020. That's all the words I got. Yeah. CNBC's Beijing correspondent. We're happy to have you here, Eunice Yoon.
Oh, thank you very much.
Tell us what's behind these moves. What's going on?
Well, Chinese investors were really excited overnight, mainly because the Chinese central bank had decided to cut the amount of money, cash, that banks are required to have on hand by 50 basis points. So that was effectively injecting about $110 billion into the financial system. And this happened a little bit earlier than people had expected. Everybody was thinking that the central bank was going to make this move, but it was ahead of the Lunar New Year holiday, which normally sees these types of cash and liquidity injections. But it was an indication to analysts that we are going to see more targeted cuts to come. And then add to that, the Beijing leadership has been indicating that stabilizing the economy is a major priority for 2020. And a large part of that is because in 2021, there is going to be a big party for the Communist Party because it's the 100th anniversary for the government. And at that time, they have promised that the country will have a moderately well-off society. And by that, they mean doubling the GDP and the per capita GDP from 2010 by 2020. So people take that to mean as 6% growth for 2020 and making sure that the economy is going to be stable. So
this was a first move of stimulus, more to come in all likelihood.
Yes, very much more to come. But targeted.
It wasn't a first move. This is
no.
Right.
This is the eighth time. They've been doing it for quite some time.
For a year, 2 years, or whatever the number is. This is the eighth time they've done it. Do you find when you look at the growth that China has is enviable for the rest of the world, but when you look at it compared to China to itself, and you start to see the lowest growth in 30 years, is there any panic that goes on in China? And do they say, how do we keep this train on the tracks? Because it's just not enough for the world anymore.
Well, for years, people in China were used to the double-digit growth. Right. So when it started ticking below double digits, there was already some panic. And now that it's gone down to 6%, even though it's a big number in most countries, there is concern about what this means. And a lot of that is because the way Chinese government officials have traditionally been rated and measured by their success for a lot of different things, including promotions. It's all on the economic targets and meeting economic targets. So the government has been trying to move away from that, but it's still very prevalent within the bureaucracy.
How big is the trade? You know, we'd spent months talking about the trade deal here. How much is it a topic of conversation in China?
It's a big topic of conversation. I don't think it's the main reason why the economy is slowing down, but there is concern about what this means. I mean, even it's been affecting consumer sentiment more recently, where people would say, oh, well, this isn't, I can't find something in the grocery store, so it must be because of the trade war. And so there is, and especially within the manufacturing sector, there's a lot of concern about what this means.
Yeah. Stick around while we pivot to Chinese tech stocks. Some of those stocks did very well today.
Well, I think Eunice just said it. I mean, the consumers, this is a move geared towards consumers. So when you look at the outperformance, it's in Baidu, it was in Alibaba, it was in Tencent. I mean, these are all names that I think that a lot of investors would say without the trade war, they would have been higher year over year. And so let's start off the year with them up 5, 6, 7%. That doesn't sound like a great way to start the year, but with that sort of confidence, I think Eunice mentions the fact that, listen, this is a one-party system over there. They will do what it, I'm going to answer Steve's question. They will do what it takes to keep the train on the tracks. It's just that simple.
It seems like it's that Fed put we had here from a few years back, that if they're just going to keep cutting or doing whatever they have to do, I mean, then you can't argue with it. It's just sort of a gravitational pull upward.
But how much of today's move is anticipating the future stimulus rather than what just happened?
I think a lot of it is having to do with the future stimulus. I mean, even though it's targeted, there's still a debate going on in China as to exactly what that means, because the government understands the overhang and the problems from stimulating too much, but at the same time, they don't want this train to go off the tracks. Right. So that's why people are expecting that there will be more stimulus.
I'll give you one other thing that when everyone says that China is in a better position on a negotiating front, China doesn't like to lose. And when you start to see the supply chains, granted these are long-term events that takes a while to turn the ships around, but even whether it's incremental or percentage-wise or more than enough to move the needle, they don't want to lose that. So they have a vested interest in getting this deal done before they lose an Apple, even incremental, or someone else. It's about 30 or 40 names that are starting to do it already.
Yeah, there's definitely a concern that they're going to lose jobs because jobs are the main priority there for the leadership. And so they don't want to see the manufacturing sector or the supply chain start to leave in any meaningful way. That said, in China, as you guys were pointing out, it's a one-party system. And so the political factor is also really important. And if the government and President Xi in particular decides that it's just, it's worth the financial and economic pain in order to make a larger point for a long-term economic future, then they're just going to go ahead and deal with the pain.